Good afternoon, everybody. Good afternoon. Welcome to Paul's Monday Market Update, number 187 for Monday, the 16th of June, 2025. Hope you're all well. Hope you've enjoyed a rather eventful weekend. Hope you're ready for a full-on eventful week ahead. As always, if you're joining us here in the live room or on the YouTube live stream, it'd be great to know that you can hear my voice and that you can see the slides and the technology's working before we crack on, as always. Super. Thank you. Thank you very much. As always, Monday Market Update is just that, okay? It is it's me flying through as much as I can fit in the next 25, 30 minutes, looking at strength and weakness within the FX markets, looking at a few charts of interest, and then finishing off with the live markets themselves. It is not a signal service. It's not trade recommendations. It's just me sharing what I'm looking at the moment and might be of help or use to yourselves. As always, you're very welcome here, okay? Very welcome to join us. Just remember that you are always responsible for your own trading decisions. If you want a bit of help or support, or if you need a little bit of accountability with your trading, the VTP tag group is up and running, okay? That runs as a weekly group to help support traders. You can ping me or use the QR code if you want more information. If you want a little bit more education, as always, I'm doing the Monday Market Matters webinar this afternoon at 2 o'clock for active trades. Today we'll be talking about trading using supply and demand. You can register through their website or through the QR code there. And I deliver a Market Pulse weekly update for Admiral Markets every 7 o'clock Wednesday evening, London time. You're welcome to join us either through the website or once again through that QR code. All right, okay, let's crack on and let's have a start as always with the STAM. I'll have a little look at what that's telling us. If you're new to trading or just new to joining us, I appreciate it might seem a little bit overwhelming or intimidating, but all it is actually is it's parts of the model that I do at the weekend when I do my own analysis, where I create my STAM model, where I'm looking for strength, trend, and momentum, primarily within FX markets, but then equally within indices and commodities markets. So what's this telling us? How can we use it to help us? Well, here we are. We are into week 25 of the year, almost halfway through the year. Where's the strength and where's the weakness? Well, we've got a new boy on the top. So we've actually now got the euro. Okay, euro has basically elevated itself to the top of the spot, and we'll look at that in a moment. Swiss franc, okay, remains in a second spot there, as you can see. And at the bottom remains US dollar, but also the Aussie. Okay, the Aussie dollar has kind of sunk its way into there. What we do also have is that we've got those kind of the rest of those condols are in the middle of the park, and we have sterling. Okay, has rolled off those highs from being number one for the last couple of weeks, rolled off into number third position. Perhaps not a massive surprise. So. Of course, there's been a lot gone over the weekend, which we'll touch. But also a case of, this is a very big news coming down the pipeline. There's a huge range, okay, of news pretty much after today, all for the rest of the week, which you'll want to keep on top of, all right, make sure that you're pinged to it. But probably primarily for me, okay, in terms of we have, is it 4, maybe even 5 of the central banks speaking this week, okay, kicking off with Bank of Japan tomorrow, okay. People aren't really expecting a sort of a lift or a change from them, but they will, of course, want to know what the sentiment is of Mr. Ueda as after the recent sort of tariff tirades that we've been dealing with. Then we've got UK CPI inflation numbers, all right, on Wednesday morning. Clearly, people will be keen to see what impact that will have on the UK. We've got FOMC on Wednesday evening. Once again, people aren't expecting a cut from them, but it'll be interesting to see what Mr. Powell has to say. Then Thursday, we've got the Swiss National Bank, who we are expecting a cut from, okay, a 25% basis cut. And then we also have here meeting, okay. And whilst we're not expecting a cut there from Mr. Bailey, if there's to be any change, or the sentiment in any statement changes, then of course that will have an impact on markets. And then we've got UK retail sales Friday morning. So there is as I said, a huge swathe of information coming out. Okay, so of course that is going to have traders. Traders and investors are going to be sat on the edge of their seat waiting to see what happens. And then, of course, with that, well, we have the events of sort of Friday over the weekend, namely the sort of resumption of attacks between Israel and Iran. That had a huge impact on markets on kind of like Friday night oil. Okay, and for markets that were open over the weekend, there was a little bit of volatility there. But interestingly, it is, as we're looking at the live market at the moment, it hasn't followed through as we would normally expect. Now, admittedly, a lot of that is to do with Trump's comments, okay, on social media about how he's having conversations about the wanting peace. The Iranians apparently coming out saying they want a ceasefire. Why wouldn't they? They've been absolutely battered, and then even the Israelis sort of not been very committal to a ceasefire. And once again, they're battering the Iranians. They're going for regime change. Why would they? Why would they want a ceasefire? They've got the upper hand. So, but markets have kind of taken Trump's comments that there will be a ceasefire and things won't be as bad as possible. I'm going to reserve judgment on that. I think we could be in for a rather interesting, volatile week. It's trying about, will the Americans get the Israelis to heal, or will the Israelis get the Americans to heal and get them to jump on board basically the regime change plan in Iran? We shall wait and see. But market seems to have, you even see it here in our kind of relative performance. We had like risk on Kiwi and Aussie, okay, sort of leading the pack there, and this is just my STAM. Even that's just it's just confirming. All right, it's just confirming, namely, okay, all right, Swiss and Euro are kind of clearing there at the top, and Sterling's kind of rolled its way off the top there. So I was expecting, because I did this on Saturday morning, I was expecting maybe a big change, overnight once markets opened in the Asia last night, but it's not really. It hasn't really followed through. Now, as I said, I think the situation will unfold over the next day or two. We also, of course, as I said, American markets will open in an hour, 90 minutes time or so, a couple hours time, and of course, then traders are going to be focused on those big central banks saying. So whether, other than the price of oil, which we look at the moment, whether kind of central, or whether the kind of main institutional traders, investors are just literally sort of not interested. Is you might see that as that at the moment. Okay, they're more focused on FOMC. So yeah, it's going to, as I said, it's going to be an interesting, eventful week. Even when I look at the indices and commodities, that's still all green, and we'll look at that in a moment. I thought this might have changed, okay, or rather, I thought this might change drastically today, but on the electronic contract trading earlier, it hasn't so far. Now, of course, that can. VIX has had widened its way up there, okay, but it not as shocking as I might have expected. Okay, maybe that's just, as I said, whether markets are distracted, complacent, whether markets just no longer care, I don't know. But I think, as I said, it could be a rather eventful week with the Middle East and stuff, and so I will be curious to see how that unfolds. We'll look at the live markets on. All right, so let's have a little look at interest. Not unsurprisingly, okay. There's a couple of defence stocks in here. First one being Babcock here. So Babcock have got lots of things, but they do an awful lot of work on defence. And as you can see, this is well, and it's been quite something, right? From if we look at these from lows back in 2023, trading around about, I think it was trading around about 260, 270 pence. Where recently, bang, we're over 1100, right? Over £11. You've gone from about sort of £2.60, £2.70 to £11, etc. That is quite some move, isn't it? And that has accelerated. Okay, it's accelerated this year based upon European grandstanding about defence projects. We'll actually see if there's anything behind it, but equally also the UK Strategic Defence Review has just literally accelerated it. So, it's almost like perfect storm, but in a good way for some defence companies. And as you can see, that had just literally just rifled its way. And I think we might have talked about it here a couple of months ago and stuff, and saying it already done well, but since then it has just launched itself. So for me, that £10 would be the big run, and what I'd be wanting to see is price probably come back and test it and hold. If it holds above it, that is immensely bullish. If there are peace deals, let's say in Middle East, Ukraine, well then I think it drops back to about 800. That's what I'd be looking at there at the moment. But as you see, that pretty much doubled. It's just quite something. And then another company I have been in and out of for fine players, okay, and other defensive subsystems. So basically, uh, well, aircraft, tanks, ships, etc., defend themselves in terms of decoying, missile attacks and what have you. And I started. That was about 20 odd years ago during the second Gulf War there, okay, where the share price shot up because, of course, there was huge demand. And then in the last couple of years, okay, they have once again, having fallen back, they have shot up again because of Ukraine. But then once again, you can see that as kind of the world has been looking there, from lows there, right, from lows there, here we are at £6. Okay, prices double effectively. Well, prices doubled in the last couple of months. Now there has been a bid by an American, I think it's an American private equity company. I'm sure someone can correct me on that, but that has kind of let's put say sales, should we say, but then invariably, as we can see, you've got European grandstand in, UK SDR, and then invariably, they've just literally blown this price up. Okay, so I suspect using the word blowing up, terming up price is probably not the most appropriate of terms, but you just throwing out stuff in terms of look at this, and you could look at a whole host of other defence companies that that they have rocketed up this year based on all these events that are going on. Me, I've talked about this quite a lot. It's a sector I keep a real close eye on and what have you. It's a sector I understand, so I'm happier sort of operating it. Yeah, if you can see for yourself that it's quite some price there, and a bit like what we just talked about Babcock. If there's peace deals, I expect price to but if there isn't, well, I think price, simple as that, really, simple plan. Okay, so this is perennial perennial favourite of mine to sure. This is International Works weekly chart. Many of you might know them as in the UK as Regis. Okay, they're co-location shared workspace. So the reason I like shorting them is because during the down when I had an office there, they literally locked me out of the office, but they to charge me for it, and so I made those charges back by shorting their own. It was a pretty easy trade by Zoom, short commercial profit. A terribly hard trade. So invariably, I've always kept an eye on these, and because here from this weekly is that for the last few years, okay, we have literally, I'd say, been in a range there between like 130 pence and £2, and that's basically how that variably has worked. Okay, it's worked very okay. It's worked there range. Week or two, we have back up to there. Okay, we had a really, and if you look at that, that's the strongest weekly close in years. But we came all the way back down within it. When I'm always interested in how price responds at these levels and looking at some great opportunity just basically take a swing of weeks and months rather than a few days, and we're at that position now. The kind of thing that is curious to me is also is that the kind of the big weekly 200 north of for many years. Is that basically kind of where effectively a hold up? Okay, is that gonna flip from being resistance to support? You can see the 20s holding, even the 50s turn up. I would be looking to see, do we drift our way back into that 180 level, and then what do we do? That do the moving averages all just come together? You hear me talk about it. When they wrap up together, coil up, it's normally before a big move. So then you'll be looking at, well, catalyst to basically have a commercial property company going higher. So your guess is probably as good as mine. But as a short-term trader, you might just want to look how that plays out over the next couple of weeks. And then finally, Apple, which we haven't spoken about for a while, but I was kind of curious about it because over the last couple of weeks we've talked about risk on relief rally as tariff fatigue set in, and for a lot of those tech companies, those FANG companies that everybody loves, including looking at Microsoft, etc., they have rallied. All of them except Apple. Apple has remained somewhat moribund in its price action there. Okay, as you can see here. Excuse my drawings. All right, I look at that as a little bit of it's kind of you look at that as a flag. Yeah, flag, which is normally a continuation pattern. It's move there, but I would look at us really. We're just pivoting around sort of $200. Now, as I said, the other companies, they've all kind of, they've all rallied back strongly. Now, Apple seems to have a fair amount of woes. Okay, sort of tariffs are hitting it. Some internal issues are hitting it. People not wanting to necessarily pay, another $1,300 for a new iPhone is hanging about, and also some of their issues with their AI as well. Just like I said, it just left the share price a little bit moribund. And I'm just watching this to see, if we see this coiling up, okay. And I think in some ways also it links to an element of the ongoing tariff issues, namely that if there is, real clarity after the recent US-China talks, that whether that will sort of basically allow Apple to rally back, or whether it'll weigh pivoting around $200 and we're coiling up before it makes its next move. So I'll just add that to the watch list. Okay, so all right, there's the charts of interest. Let's switch across to the live markets now and see what's going on. So if you'll just bear with me for a moment, we'll just switch across. So just as I said, just bear with me 1 second. Let's bring up the charts and let's see what the story is. Okay, so hopefully you can still hear me. Hopefully you can see the charts now. Okay, so these are indices charts I've got here. Dow on the weekly, NAS, S&P 500 on the weekly, Russell on the weekly, FTSE, on the weekly, Nikkei, DAX. All right, so let's have a little look. Why don't we start with oil because of what's been going on? So we talked about it a few weeks ago. This is the weekly chart of oil. 60 had been the base, and as I was saying at the time, okay, we're looking at this as a little bit of a scruffy inverse head and shoulders, all right, with a neckline, and then bang, you can see for yourself, we've gone from 60 to trading as high, just tickling the soft underbelly of $78 there. A lot of that was basically as we Israeli strike started to start off. It was Thursday night into Friday morning, sorry, as we heard the detail and data about that. But the interesting thing is that, as I said earlier, if you look at this week, let's go down to the daily chart. Yeah, if we go down to, this was the daily chart, as I said, shoulders, 60, I think we talked about it last week in terms of, kind of like a descending triangle, a scruffy wedge there, $60 is the base, the 50-period moving average acting as resistance, and it flipped it, and then off we've gone. And then Friday, of course, we just rallied up, but we came back there, we gapped up, let's go down to the hourly chart. We gapped up on the open, all right, last night. But you can see, interestingly, that we've just come all the way back down. We're back down here to the period moving average. As I said, it has been more of a risk-on start to the week. Okay, I think people think there's going to be a peace deal of some sort, and I'm going to reserve judgment on that. Normally, I'm to say whether it'll be right or wrong, but this time I'm actually going to reserve judgment because I think unless there's clearly more stuff going on in the background, we don't know. At the moment, I think that it's not over yet. There are still elements to go. Now, my personal view would be regime change in Iran. If that happens, if the Ayatollahs or leg it to, well, then invariably I would think that would be very, very bullish. Maybe not necessarily for oil, but bullish for global economy. So we'll have to wait and see, and maybe it will play out at the moment. But certainly you can see that there with oil, how that's played out. And then, interestingly, as I said, if we look at the indexes and the weekly charts, okay, yep, last week was a bit bearish, but the electronic contract, okay, it started this week bullish. Last week we ended bearish, but the electronic contract, okay, has started bullish this week, and there's pretty much that has pretty much been the same story. Those all of those indexes at the moment. If we look at say, even let Dow on the Dow on the daily chart, Friday, all right, we sold off, but we've bounced back up. And interestingly, this is wrapped up with the 200 period. But there's a catalyst. We're waiting for a catalyst here. That's why I look at that. He will give it us. Maybe there'll be a shocker. Someone or lower interest rates. Maybe I think that's very unlikely. Very unlikely. But clearly we're waiting for the next catalyst to move, and we're just grinding our way there. And you could say the same for all of those indices. Looking closer to home, starting with DAX. Talked about this, about how DAX had been above its highs, closing not exactly stellar, but wanting to stay above the sort of the early high of the year. But last week we sold off there, and as you can see, if you go down to the daily chart, we had a few days of weakness, and maybe that's also helped with euro. Okay, or rather, euro strength is what has weighed on this DAX weakness here. But for me, now I'm looking at where is the 20 support. It's flipped to resistance and it's rolling over. Now I'm interested. Do we rally up? And if it basically acts as resistance again, that would be for me an opportunity to take a short if there is a suitable setup. If we look at UK FTSE, it's the same. We are grinding towards those highs, aren't we? That's been quite some V. We didn't rally anywhere near as hard as we saw on the DAX when those American index, literally just grinding its way up there. And if I go into the daily chart, you can see for the last 6 weeks or so, you might even say last 2 months. Not exactly the most pretty, but just grinding its way higher. And now I'm looking at those highs, okay, at the from a couple of months ago. But as always, I want to see how is price going to react there. Is there going to be something through there? All right, maybe a surprise interest rate cut on Thursday, perhaps. Who knows? All right, who knows? As I said, expecting one, but things are a little bit. People are nervous. All right, people are nervous. Okay, so we'll just watch this for the next couple of days until we see how it plays out on Thursday. Looking at other few commodities, gold. Not unsurprisingly, that kind of bull flag is now starting to play out. I mean, a lot of that is driven by that uncertainty. The basically you buy gold, all right, uncertainty, and there was kind of great trades. For those of you who follow the Pen Pizza report, okay, there was kind of a my war daddy trade, all right, Thursday night into Friday, which was just literally about gold rallying hard, all right, war in the Middle East. No surprise, that just gives gold a bit of a pump there, not a real shocker. Silver maintains. Okay, here we go. Silver maintains its weekly. It's pushed those highs. A bit of indecision last week. This week's not terribly exciting so far, but you're only a couple of hours into the day. You might say on the daily chart, Paul. Let's just actually bear with me a second. You might say, Paul. There's a. Oops, excuse me. The kind of the world's scruffiest bull flag there. Okay. maybe that's what it is. Maybe we need to come back and retest that breakout level before we move higher. And that's what I'll be thinking about. Bitcoin. All right, Bitcoin is. We talked about this a couple of weeks ago, didn't we? For me, it has to stay above 100 grand for it to be serious. But you might look at that as saying, well, Paul, that is a bit of a double top there at the moment, and it is a bit of a double top. All right. And others might say, well, actually, Paul, really you're looking at about a quadruple top there and just under 110,000. I think this is also an element of risk, or people's risk sentiment, and maybe that start of this week bullish is just a reflection of kind of everybody. Everybody wants to be a bit risk on at the moment. That's what people are excited about, and also it might also be a reflection of the kind of the dollar, or the lack of love for the dollar, which is what we've seen over the last couple of months. So. Let's have a look at dollar. We'll have a look at euro, and we'll have a look at sterling for today, seeing as euro has come to the top of the pile. So this is moving into FX. I've always, this is my dollar profile here. So I've got Aussie dollar, euro dollar, pound dollar, dollar Swiss, Kiwi dollar, dollar CAD, dollar yen, dollar index. Okay, so let's have a look at the dollar index there. That's what I always have a look at the weekly chart. Yeah, I've been saying about where we're going to be in a range between sort of 98.50 and 100. Well, that's all gone, hasn't it? That's what happens when you start, lobbing rockets and missiles at each other. It has had an impact on just basically, we can see that just basically that dollar weakness has continued. Thought there might be a bit of respite on Friday, but you can see today we've started that, and it's interesting that has just continued with that, basically that kind of dollar weakness there is kind of. Yeah, if we're going the 4 hour chart, 4 hour chart, we're looking Thursday for Friday. That was double bottom, nice double bottom there, bullish key reversal. But I haven't followed through on that. Now it might be coming down to test those lows again. I will watch that, but equally, we might just kind of go a little bit sideways. Remember, we've got the Bank of Japan tomorrow, FOMC Wednesday. And the next 48 hours or so, could be the kind of interesting too, especially if you start to, to consider what's going on in the Middle East and what impact that. But it has broken out of that rate for a bit, and the dollar trend is low. It's the bottom of the STAM, and that's just confirming there. Okay, euro dollar, pound dollar, dollar Swiss franc, okay, Kiwi dollar, dollar CAD, dollar yen is probably the one that's a little bit mixed, but we've got Bank of Japan tomorrow, and so it's no surprise that is probably the least. Dollar yen is the least clear one of us of all of the kind of FX dollar majors. All right, let's go to euro. Okay, seeing as euro has bullied its way to the top of the pile of the STAM. So euro profile, I've got it on weekly. Euro dollar, euro sterling, euro Aussie, euro CAD, DAX, euro Kiwi, euro Swiss franc, euro yen. So listen, euro yen, you can see over the last few weeks, bang, that's been pretty strong, hasn't it? Euro against the dollar, as we said, dollar weakness, euro strength. Euro is even rallying against sterling, but we'll look at that more in a moment. Euro the last few weeks has rallied. Okay, euro against Kiwi has rallied. Euro Canadian, strange beast at times. I find it a strange beast. I've drawn that pretty poorly, but hopefully you get the idea. I just look at that as a bit of a triangle that's coiling up. And the other one that's kind of interesting me is that euro again, and if we look at this, I look at that really for the last couple of months, that is just that's just been in a range there between about 93 and 94.30. That's what I'm sort of looking at there. There's some wicks to the north side, all right, but equally, once again, you've got basically the 50, the 20, all right, and price all wrapping up. Now, of course, remember we've got SMB on Thursday. They're likely to cut. Okay, so you'll be expecting that to be a reflection of perhaps some euro strength come through off the back of that, or Swiss franc weakness. But at the moment, I'm just watching that to see whether that kind of whether the Thursday's action is enough to provide a catalyst to give us a little bit of a blow up. But certainly, as you can see, euro has been strong against pretty much all of the others, and hence why it's worked its way to the top of the STAM. Okay, let's finish with, as always, we'll finish with sterling. Having a look at the sterling, what's going on there. It was a bit of a me this morning on the intraday basis. Okay, there was a scratch, 2 losses and 4 wins, etc. So, but it was kind of a mix. There was very mixed price action there. But let's start with a cable. Cable, listen, the strength. All right, sterling's been top of the STAM as well. But last week, excuse me, terrible hay fever at the moment. There's a little bit, I would look at that as a bit of a spinning top, okay, a bit of a spinning top. If we go down to the daily chart, here we go. The daily chart, we looked at this rallying up, bull flag, and it is, it's staying in, it's staying in its, in its bullish trend. But, I'm just looking at that over the last couple of weeks, this month, you might say is it a triple top? I needed to get up to new eyes to really convince me on that. And perhaps we'll get that this week with FOMC and Bank of England, perhaps. But as I said, it's a little bit, I'm just watching the way it playing out there. Certainly, this morning was like kind of just my scratch. It just kind of, it just hasn't followed through after the initial move there. That's just that's what we're seeing there. But it's going to be a week of messing around with it. Pound against yen, all right. On the weekly chart here, we're still up against this long trend line. Remember, Bank of Japan tomorrow, FOMC Wednesday, UK Thursday. So, I'm not expecting major moves over the next 24 hours, but certainly by the end of the week, we might get a bit more clarity, okay, on what we're doing and whether we're breaking higher, which would confirm like risk on, all right, that everyone's just kind of risk on. If there is a peace deal or something like that, or a hint of it, I would expect that. But equally, it could be the opposite. If there isn't, well, we might see a bit of a, that trend line acting just basically as a barrier and us drifting. And against CAD, okay, I'm looking at that because really for the last few weeks that has just been a little bit of sterling weakness, Canadian dollar strength, and of course, if there is like a new bump, a new trend in oil, I would expect that to sort of to have that kind of impact and for that to continue. Pound against Aussie, if I look at pound against, excuse me, pound against Aussie, last couple of weeks, there's nothing that I see there that's terribly exciting. Pound against Kiwi, last week, we've kind of put in this bullish pin bar here, but once again, I'm not massively excited about them at the moment. Okay, not massively excited. I was waiting to see if I'm watching the 20 on pound against New Zealand dollar on the weekly chart. And that's what's guiding me at the moment. If you look at pound Swiss, you've heard me talking about this, namely that we rallied up. Okay, we had a nice pin bar here, but we didn't follow through on it. But maybe we have now. As I said, I've kind of been using this as a bit of a pound against Swiss as a little bit of a risk on, risk off parameter. So excuse my drawings there, but because we were just banging back and forth because sterling and Swiss franc were number 1 and 2. But of course, last week, we broke out of it, okay, a bit of risk off, but then we've already come back to it today. So I'll be interested to see, if we go back into the range, that's kind of, I wouldn't necessarily say it's risk on. It's just not as risk off as we thought. But then, of course, as I said, Thursday might be the catalyst here. This might all be what we see on Thursday from the Swiss National Bank and the Bank of England. That's what we look at there. And finishing off with euro against sterling. The weekly chart, we talked about it a couple of weeks. We came back to the 50, nice bullish pin bar at 84, and we worked our way up from that, and we have them up to the 200. We go down to the daily chart. It's the same thing on the daily chart. We kind of drifted our way down to 84, the 200, nice bullish key reversal, and we've just basically worked now. We're above the daily 50. We're above the daily 50. I suspect we'll come back and test it, but we're above daily 50. That to me is bullish euro, weak sterling. That's what the STAM's showing. That's what the price action is showing, and so I wouldn't choose to fight that at the moment. Okay, there you go, ladies and gentlemen. Let's draw that to a close. As I said, I'm always flying through as much as I can fit in over the next over the 25, 30 minutes. But I hope you found that useful. I hope that gave me a little bit of help and insight that you can carry forward. As I said, it is going to be a very, very eventful week in every sense of the word. So you're on top of the news and you're also on top of your risk. And I hope you have yourselves a trading week, everybody. Cheers.